All right, welcome back to week 11. Sorry about week 10 in the microphone, but I didn't remember to clip it on my chest. I just left it on the desk because I'm an idiot. So hopefully this sounds better this week. And we had a bit more activity this week because we had some cash, and I realized I'd kind of been neglecting the vertical and the spreads that I typically do for earnings plays. And since we're light on earnings plays, we got into the spreads a bit more this week. So again, we've got the 15th through the 21st, just to make sure in case we had any assignments. And we had 23 fills, 21 orders total, because some of these filled twice. I'm just going to roll through like I did last week with a quick run through. I'm going to note Target and Ulta specifically. I think there's another one or two here. These are the post-earnings plays that they went haywire during earnings, and I thought the move was a bit exaggerated, so I sold a put spread or call spread, whichever direction I thought it might rebound from. So if you remember Ulta's example from last week, literally fell off a cliff, right? Seemed a bit excessive, especially because it was all good news for their earnings, just the CEO changed. So assuming the CEO is not an asshat, then it should either maintain or recover. So, and it did nicely, but of course I was being too greedy on Ulta, for example. I wanted too much out of it. I could have closed out for a quick 80 or 100 bucks 3 days later, which is pretty common on these earnings plays. They can snap back pretty quickly, which is why I like them. And so far this year, I'll show on my on the P&L here shortly on Wingman, on our journal, that I think I'm 100% for these. So I actually love these. So I found a couple more that I could do some on. These two were just closing, just normal spreads that just closed on their own, 35-60 cents. So those are about 100 bucks a piece or so. Got some more earnings. All of these red ones are earnings. These are all closing out the earnings. 5. Oh man, we'll show a quick chart of that one at the end because that one hurt. I basically got scared. I got scared and got out for small win when it could have been a $500 or $600 winner. So those hurt, but we'll talk about that. Closing a Best Buy. Those are my favorite. Best Buy and the ones earlier, the Cognizant and what was it, the SPY here. Those are set like 30 to 45 days out. And so I'll just be like hanging out at wherever, Jack in the Box, McDonald's most likely. And ding, my phone goes off. It's like, hey, your order closed. I'm like, cool, that was a sweet 100 bucks that I didn't do anything of. Now, it may take 2 or 3 weeks. On average, I think I do about every 10 to 15 days is when they close out, but it's just easy, right? Don't hate me. It's simple, not easy, right? You can set it, you forget it, set the order up to close it out for X amount of profit, and you just let it go. So, some final earnings there. I think this week was actually a profitable week, a couple $100, so that's always good. So we'll flip over here real quick to the P&L. And so what is his name? His name is oh, it's not Brian. Oh, we got some help. Look at that. But the guy behind Wingman is absolutely incredible. Let's see if we can. No, is it this one? That's not the right one. That's right. But he's awesome. I've been working with him pretty closely because Wingman, this journal, was very new when I first found it, and so big shout out to him. And again, I'll have his name in the description. But he's definitely good peeps. I actually had a long call with him when I was down in Florida, just talking about the future of the app and does he have an affiliate program? Can I help him sell it? So good peeps. So boom, yeah, almost 600 bucks last week. That's what we like to see. Hopefully it's a little bit more of that. I will show you real quick because last week I did this. We showed a total, so if we minimize that, I was down 76 bucks, right? So what this is saying is I was actually down over $600, but because I made 600 bucks, and then the running totals of all these open positions I have left was for the week down 76 bucks. But again, those are all running. I've still got plenty of time on those. That's why I'm not counting those as losses now. I only count what's closed and what's official, right? So 571, solid week. Again, our iron flies putting in the work, 63%, $300 in gains. Then a bunch of those short puts I was talking about closed out for 260 bucks for just sitting at McDonald's eating cheeseburgers or whatever. That's what we like to see. That's what we like to see. And our big cojones QQQ position that we got in last March around COVID crash is getting ready to come due thanks to long-term gains. So we'll be closing that down. We'll have a bunch of influx of cash that I can play with, and so we'll just be ideally just doing more spreads of the same kind. So I'm not going to do more positions, and we'll pause that for a hot second because I need the other platform. But I wanted to show you the post earnings plays. So these guys. Let's see. Here we go. Post earnings plays. So far, the 2 in the last week for 100%. And if we go for the year, there we go. Post earnings plays, 10 of them, 100% up $1,200, right? So those are the ones that's after earnings. The move was crazy, right? And I probably lost money on that first one. Maybe I got lucky and got out initially due to the volatility, that swing, right? But 1,200 bucks, 100% chance. Solid. So we may have a new strategy there. I don't know. That's kind of why I'm doing them and really making sure that I'm sticking to them because that's part of my testing for the year. I should be back testing them without any money involved, but there's small amounts. It's close enough to the calls and put spreads that I trade. So I just add them in there, and obviously they're winning, so I don't really care that they're not paper money. But don't do as I do, do as I say. Yeah, so we're done with that. And then we're going to switch back to the toss, and we're going to show you. Okay, so yeah, the position. So I was saying, so this Q position I put on back in March, and it was actually 2 of them. I bought one of them on. This isn't right. They screwed up everything when they switched my account over. But it was like mid-March for the first one of these 150 calls. And then I bought another one in April 9th for 150. So I have to wait till April 9th of 2021 to have the full 12 months of time passage so I can get capital gains, long-term capital gains taxed on those gains instead of short-term, which is obviously a big difference in tax rates. So we're waiting on that. But when that's done, we can close the entire thing, both of them and the 2 covered calls that I've got, making a little extra cheddar on the side for a total of 16 grand, right? So that's going to go right up here, and you can't see it. Hang on a second. Let's see if we can pull it out here for you. I don't want that. Let's shrink this. Oh, there we go. How's that? Can you see that now? So we got 8 grand here. That's about to have another 16 added to it. So all I'm saying with that is that's just going to allow us to make those $260 gains that you saw on the other platform of those 3 spread positions for the post earnings plays. We're going to be able to do at least 2 contracts at a time, if not more, when that happens. Just because we have more capital now, right? So all of these, as you'll see, right, there's a bunch of positions. I don't want any more positions. Really, I'd like to trim this down to like 12 to 15. Really more like 10 would be ideal. But if you look through all these, all of them are just single contracts. So with the influx, once I close this out here in a few more weeks, I'll be doing like 2 of QCOM and 2 of Strat Therapeutics, 2 Russell 2000 put spreads, right? And that'll just ideally add to our growth because we're already doing well on the spreads. Over time so far, it's the earnings that are really biting us in the ass. The earnings won't get any bigger because the account size doesn't allow for it until I get either another deposit or we start really banging them out as far as the profits. But the just getting bigger in number of contracts to utilize the capital so that we won't have 24,000 sitting in cash will have 10,000, 12,000 or so sitting in cash at any one time. So I'm excited for that. But that's pretty much it. That was, oh, I want to show you the 5. That's what it was. Yeah, so this one was a fun one, right? So after hours, boom, great news. Shoots up, right? Sweet. Not sweet for us, right? Because our shorts were about 210. So that would have been a max loss if it stayed up there. But obviously, boom, starts to fall down. And I like what I see here is it's not making new highs. It's slowly kind of rolling off the edge of the counter, right? All good news from a technical perspective that it's going to continue in that direction. So I moved and adjusted my order, my profit to be just bare minimum, right? You saw in the orders before, I sold for about $9.75. I moved it all the way to $9.25 because I was like, okay, I'm scared that it's going to go up for whatever reason. Even though the news was not good, the analysts were downgrading it. It did beat on the earnings and on the sales, but like if you're getting a downgrade, that's all that matters. The rest of it just doesn't matter. So just poor judgment on my part. I had it down at around a $6 beforehand, which would have been a nice $300 profit. And obviously, as you see, that would have been money. But this first bar, this little spike here, and actually we can switch to the 1 minute chart. Oh, but now we gotta go back. Okay, here we go. So we go to the 1 minute chart. This green bar scared me. That was right before the open. And then this little sum B scared me again, right? That's a new high, and it came way up there. So I panicked. I sold for whatever I could get, which was about $50 in profit. Still a profit, not that mad about it. But obviously, look, it just fell right off a cliff, right? This would have been, it fell actually too far. But right around here, it could have gotten out for about $4 or $5. Should have been a $400 to $500 win on that one. Just kicking myself. I mean, it does happen, but I said, as I just told you, this is what I was reading in the morning. It's fallen off. It's going to continue down. It's going to go down. And then the news. Let's see if we can read some headlines here from back then. 318. Oh. Boosted price target. Where's the bad news? Yeah, maintains overweight. That's not good. Price targets raised. That's not right. Anyway, not good news that came out, except for the few headlines that I'm reading. Isn't that how it always works? Don't ever do anything off the cuff when you're recording, but that's all right. So, not ideal, but still a good week. Almost $600 up. It's trending in the right direction. And yeah, so that's it for week 11. Thanks, guys, for watching.